Hi everyone, and welcome back to our channel. This is the second video in our scope of the educational purposes from the very basics of the finance and stocks. We will continue diving into the basics of the stock market, and if you ever wondered what the stock market is, how it works and why it's important, this video is definitely for you. By the end you will have an understanding of key concepts, participants of the flow, and even trading platforms you can explore. So let's get started. What is the stock market? It's essentially a marketplace when buyers and sellers come together to trade shares of publicly listed companies. When a company decides to go public, it issues shares through a process called an IPO, or initial public offering. These shares after the IPO are then available for trading on stock exchanges like the New York Stock Exchange, NYSE, or NASDAQ. For those of you who are in our channel for a long time and gone through the videos, those terms are meaningful because we worked with some of those. And just some introduction after completing this series of market intro videos. Our next exercise on YouTube will be creation of a stock heat map, where we will divide stocks of the companies by their sectors of economy, like software, telecommunication, healthcare, finance, etc. And we will see how the certain stock performed for between two periods of time, the beginning and end of the observed period. So let's get back to this series, and by thinking of a financial stock market, we can think of it as a giant auction where the price of each stock is determined by supply and demand. Let's go in Robinhood to some stock. What it will be, let's go for Tesla. See how it is performing. We can see here that there is a significant drop in Tesla stock price. At the beginning of today, the price was around 410, and now it's in between 380 and 370. So this is exactly the market, how it is. The price, which is fluctuating based on the decision of stock owners to sell it, or desire of those who have money to own it. This much about the general concept of it, and let's examine on this particular screen what does it mean. Price was higher and then it went down. What does it mean? It means that some people who own the stock decided to sell the stock, and much more than the people who have money wanted to buy the certain stocks of Tesla company. So if people are eager to buy a stock, it creates a demand and the price goes up. If more want to sell, there is a supply offer which is more than the demand, so the price goes down. This market plays a crucial role in the economy, enabling companies to raise the capital and investors to grow their wealth. One more example, the company which recently went to the IPO, company named Service Titan. Here it is. It went public around a month ago. Let's have a 3-month period. Yes, we can see that they went public on December 12th. And let's open on a month granularity. Before IPO, the price which they announced for their stock was around 71. So it was calculated as an estimated price. But when it went to IPO and the trading started, there was much more demand than a supply of stocks. That's why the price went high, and right now it's around 101, which is around 40% above the initial price. So this stock gained 40% in 1 month, and the company was able to raise the capitals, and those stock owners of Service Titan were able to grow their wealth. Now, how it works. The very high level and very simple terms. Companies list their shares on an exchange like NYSE or NASDAQ, New York Stock Exchange or NASDAQ. Investors like you and me are using brokers or trading platforms to buy and sell these shares. Right now you can see here I own 600 stocks of 3 different companies, 400 of one and 100 each for 2 others. So I am considering myself as an investor. And this is Robinhood. This is the trading platform which allows me to buy or sell these shares. And the company's stock price changes through the day based on supply and demand, news, or anything else which can impact the stock performance. You can see this Hive Digital Technologies, it was low at the beginning of trading day, and now it's above. It's from the lowest point to the highest point, 282 and 309. It gained more than 10%, or a bit less than 10% actually. To be precise, 8.42%. This is the gain of this stock. Now, who are the participants of the market? I forgot one more thing. Another impact reason on a stock price can be company reports. That when company declares, and almost all public companies should go on financial reporting for their investors and provide data on company's health, financial health, institutional health, and operate with numbers. Numbers are the key to understand company's performance, and we will go through it later on in our series. So now back to key participants. Several important players are on the stock market. Retail investors, it's me, it's you, if you are on this market. We own stocks and we invest on it for personal financial growth. Then come institutional investors, big players like mutual funds, hedge funds, and pension funds. They operate with the amount of money that are under their control, and they are like hired financial experts for people who invested money in their funds. Next are the brokers. which we covered again. Those are platforms like Robinhood or Charles Schwab or others. I'll go through the brokers based on the location shortly. And then our market makers, so-called. Those are entities that ensure liquidity by buying and selling large volumes of stock. Now, based on your location, there are different platforms which you can operate. For US, those are including but not limited, of course, Robinhood, E-Trade, Ameritrade. For India, for example, it's Zerodha or Upstocks. For United Kingdoms, it's Hargreaves Lansdown or IG. For Australia, for example, it's Comsec, Self-Wealth, etc., etc. I'm using Robinhood because the trading here is commission free and the user interface is very friendly. It's easy to operate. I know where it is. It's the old view of it, but Robinhood at the end of last year launched Robinhood Legend, which is their trading tool. We can cover it in a specific lesson if you will be interested, and if you are interested, don't be shy. Please express what is the part of the lesson that you want to dive deeper into it. I'll be happy to provide more information on any of the segments that you are interested or have difficulties. And this will be it for today. We will just now go quickly over the main terms that we learned today. The stock, it is a share in the ownership of the company. Market capitalization, it's the total market value of company shares. And let's open one of the stocks I own, AG. Let's check the market capitalization here. We can see here some information. It's Canadian company. Market capitalization is $1.68 billion. Dividend, it's a portion of the company profits which is distributed to shareholders. Dividend yield 0.33%. We will go over these terms later on deeper. And two more terms which are kind of showing one or the other one, which are showing the stock performance for any given period of time. It's the market. It's either bull market or bear market. So let's long story short, there are many different definitions that you can find for it. Long story short, stock price is up. It's like bull moving from the bottom to up his head, and it's bull market. Stock prices are falling. It's like the bear, which is moving his hands from the top to the bottom, and that is the bear market. So this analogy should help you imagine what trend it is very quickly, like on a reflex level. So this is it, and we covered today some part of very initial or basic knowledge base that you need to know before operate on an investment market. I hope that it was useful for you and you have a better understanding on the concepts of the stock market work, the participants, and some common terms on a very high level. Don't forget to subscribe for more videos in this series. Next, we will dive into stock metrics and how to evaluate them. See you in the next video. Bye bye.